Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. It's Monday, TGIM. Thank goodness it's Monday. So here we are. I've been really enjoying the idea. We talk about options more, so I'm not complaining about that at all. And I thought to myself, what should we talk about today? And I was thinking, what we do is we just keep on doing the same process as we were doing before, and that is that we talk about showing you how to combine the algorithm with trading options and how you use the algorithm to decide which direction to take in an option spread. There's a couple of different ways of doing options. One is they go with the theory that two objects can't be in the same place at the same time, and what they mean by that is if you have a say a product is let's say it's the euro, and we know the euro is trading around the 105 area. Okay, so in other words, if you have a 110 call and you have a 100 put, we know that they're not going to expire on the same price. It's one or the other or neither. And that's what that really comes down to when looking at the options, is that we know that they're not going to land in the same spot. In other words, not settle at 110 and settle at 100 at the same time. So, a lot of times people put option positions on with the premise that it may die in between, and they may sell binaries, call spreads and put spreads. And we are starting to refer to those things as that, and then we explain what a call spread is and what a put spread is, and we go and look at we also refer to them as binaries. In other words, it's two spreads or two different strike prices, two different options. In other words, both being calls on the binary on the call side and a binary on the put side, or you can actually create what we know as straddles, where you're on both sides, and you could be short the call and short the put. You could be a binary call spread and short a put binary spread. Let's see if I say that again over. A call spread binary and a put spread binary. So, I was thinking, okay, this is going to be fun. We're going to keep on doing this, and we're going to keep on having conversations about the options. Hey, SC, how you doing? And so I'm kind of flirting with I was thinking about over the weekend, about constantly having some slice of option conversation in the webinar always. Just bring it to the next level of, I show you the algorithm and how I use it, or at least I tell you this is how you can use it. I've done that for years, but now we're actually going to try to do examples, actually show examples and have conversations slow and steadily about it. And we'll reiterate, in other words, we'll repeat ourselves so that people get comfortable with the option spreads, with the understanding what an option is. And when someone isn't comfortable with understanding what an option is, we'll just explain it over and over again. Oh, good. I'm glad you had a good weekend. That's good. Yeah, mine was very nice. The weather got much sunnier. We finally got sunshine on Sunday, so that was nice. We've been socked in, with overcast for, 8 days or something like that here. So, yeah, I was just thinking, we'll just keep on having these nice conversations about options, and we'll also, at the same time, we run through the charts to show you where the weekly and the daily are. And we keep on doing those things. As you see on J4X, you can see the dollar index is up a little bit today, just like it is here on Chicago Quant. And you can see it here doing the same thing on our new platform of Chicago Quant, right there. And then we go to the older platform that we're trying to work our way away from. And we're doing the beta test on it. And here's the older one. And so it's moving back up just like it's doing on J4X, but at the same time, it's still in the daily sell. We've got a green and a red. And you can see the weekly is still in the weekly buy, so obviously they're not really trying to throw the dollar away yet. And with all the news about interest rates, it makes it act firmer and firmer and firmer. And we're not exploding on the way up. You can see that. I mean, you can see right here, last week on Wednesday and Thursday, there's Wednesday, and the high was 106.54. And on Thursday it was 106.47, just a little bit lower. And you can see today it's back over the 106, trading at the 22 area with a high today of 106.26. So, just staying very firm, but you can see right there the weakness, what we're seeing there. And same situation here. You can, let's see if we can find the other line. Where is it at? Where'd it go? So let's see if we can open this up again. File, workspace. What does that say? Save in JCloud. Let's see. There it is right there in the Manhattan. And it's going to fill in again. There we go. And there it is. You can see the fast is at 59. Is that 55 or 59? Let me look a little bit closer. That is at 59. Now it's 60. But you can see the slow is higher. It's at 68. So it's doing the same thing as our work is doing over here on the Chicago Quant. In other words, you get a green and a red. It's in the minus. This is still in the minus, even with it being green, just like the green and the red. And so you can see that pressure that's on it. Doc, there could be a binary with a call and a put. Yes. Yeah, you could sell the call, or you could sell both a call binary and a put binary. You could sell the premium. And obviously, we can do the mechanics of that. Let's discuss that a little bit. So in other words, imagine if you were doing it in a currency, and you sold, say, the 106, 107 call binary, and the 103, 104, or even tighter put binary. You're basically trading with the idea that it will not break out of its range, and so you would do that when there's no big news. This is there's a Democrat leader resigning from leadership amid 24 rumors. What's 24 rumors mean? Ackman would consider spark deal with Musk X. Huh, okay. Anyway, so this is the process, that you could sell one side and sell the other side, and you have a limited risk because if it's a binary, you can only lose so much on either one of them, but you can't lose on both of them. Does that make sense to you? That's that thing I started the conversation off this morning with that attitude. So in other words, it's it's only going to land in one spot in the end. So in other words, if you sold a binary on the call side and a binary on the put side, well, then chances are one of them is definitely going to be a win. That's for sure. Now the question is, will the second one be a loss or will it be a win also? I'm hearing something I saw earlier. It's kind of funny, but anyway, that's the process of it. So now what we do is we go and we look at the algorithm itself and how we combine the algorithm with the binaries. That's pretty much what we're doing really in the end. And we talk about, we can talk about the mechanics of what an option is. We should always do a few minutes of that just to begin with for new people, and then for people that have been experiencing it. This way you feel more confirmed. So there are two types of options. There's a call and there's a put. Now, call has something to define the call. there are a couple things. One is obviously when I say define it, explain what it is. You have a strike price. So there's a call, and there's many strike prices. So in other words, if it's the euro option, it could be there'd be the 105 call, the 105.5 call strike price, and the 106 strike price call, and the 106.5 strike price call, and so forth. You're just you're defining different prices. And when it says October, it means that it expires in October. So if you're looking at the October 106.5 call, October call means that it will expire on a specific date in October, and usually they'll even define, like the 23rd or the 15th or whatever expiration date it is, and it means that if called away, it would be called away at 106.5, and so if it expires at 105.5. That automatically, just says basically it closes out worthless. So, and the same thing with the puts. If you're looking at a 104 put versus a 104.5 put in October, it means the same thing. And if the product right now, as we go over and we take a look at the euro, let's put the euro up on the screen, and we can probably try to hunt down some euro options. It's the same thing. There it is right there, trading at, as J4X shows, 1.0534. So if it was 105.5, it would be at like 105 and a half, 106, 106 and a half, 107. And I think they even get tighter. They have probably, depending on what options are outstanding. I imagine you can even design your own option when you're doing a binary with Dukascopy. You can create a 105, in this case here it's at 34. It could be a 105.30 call, and it could be a 105.50 call. So you can actually customize them. And on listed options, they are just specifically just right there. All right, so when we look at the algorithm, in this case here, let's put it up on J4X, and we did there, and let's put it up on Chicago Quant, right, there's that right there, and we're looking at the option. In this case here, you can see that we've been in a weekly buy in this product, weekly sell in this product since the 110 area. So if we had bought the let's say the 108 and a half put binary, one that went out many weeks, then obviously it'd be a winner chicken dinner. And if you in this case here, once it goes into a weekly sell, you don't want to really sell a neutral spread, in a sense. In other words, you don't want to sell a 10 in that case. When it was up at 110, you wouldn't want to sell the 111 and a half binary call and sell, say, the 109, 108 and a half put. You would not want to do that, because our math is telling us that it's breaking down. And once it goes into a weekly sell, we don't know if it's going to last for 1 week, or if it's going to, in this case here, now it's going on for 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th week it's been in a weekly sell. And so, you don't want to, fight against the trend, even if it's just drifting down. You don't want to be part of that, because we don't know if it's going to be something very instant drop of like 3, in this case, like right here, on the 25th of last week, we went from a high of, let me put my cheater glasses on at the same time. Where did we do it there? We went from a high of 106.55. Within 3 days, it was trading at 105. Matter of fact, it went down to 104.88 just in 3 days. So, it's not, when it puts a negative signal on the algorithm, you would be better off selling the call binary, but not selling the put one. This way, at least you're directional. Or buying a put one, but not selling a put one. Could you maybe use crude or any... Oh, sure. Commodity is an example of how to trade and can take positions today with options. Okay, sure. Let's try that again. I'm going to put crude up there to just start off with. And we'll go and look at West Texas. Do you want to see Brent or do you want to see West Texas? I'm going to throw Brent up there just for the sake that it's up on the screen on that. And then we can show you that over on Chicago Quant on our new platform. We can show you where it stands at the same time. Let's see, where is it at? 6BF maybe? No. We'll find it. Maybe BZF. That is the bond. Okay, so that's not it. And I know it's a B, that's for sure, for Brent. Let's see, not there. HGECS. We'll find the Brent. We'll put the Brent up on here too at the same time. Let's just NVD. Let's just show you what we're doing so you don't just hear me rambling about it. And so 6BF, I believe, is... Nope, that's the real... No, I'm not sure what that is. That's the bond. That's what the bond is. And BZF... Okay. 6BF is the real, I think. Let's see what that is. Okay. Let me just double check what that is. Okay, there we are. So let's find Brent on here again. It's around here somewhere. There's Bitcoin. ZBF? No, that's bond also. Where are you? I know it's on here. And we just push that. That is the bond. Is that the bond? That must be the bond. Because Brent is in the 90s at this point. We'll have to put these things in order a little bit better since it's a beta platform. We're just exploring half the time. So that must be the same thing. So, and then AMD, and we go back to that. Actually, it's not even updating on the BZF altogether. So, and that I believe is the real. No, that must be the bond also. That doesn't make any sense either. Okay, and then there's ruble. Where'd our Brent go? We had a Brent in here. We'll find it in a second. There's the Euro GBP. Huh. All right, let's go find it and add it. I'm going to put the Brent up there for you. But if you would, if you want to see West Texas Intermediate, we can do that also. That one I know where it's at. That one I do know where it's at. All right, let's find the Brent, and we'll go like that. There we are. And let's find Brent now. Yahoo. Brent oil. Yeah, it's BZF. Okay. Let's try that again. BZ equals F. Yeah, that's the Brent. BZ equals F. So what are we having a malfunction for here? BZ equals F. Maybe it's expiring. Maybe that's what the problem is. It should be that one right there. Alright, let's see what we can do here. That is the, what is BZF? Let's see what this is. Crude last day. Okay. Let's try putting in something else. Brent. Maybe we have to put in the next month. See, that's the last day. Crude last day. So, there it is. F20. Okay, that's there. It's crude last finance day. Okay, so let's try this. We're going to add this. And this will straighten it out. There it comes. Copy. And we go here. And we go like that. Let's see, we go that and add. And we put that in there like so. Paste. No, not that. Copy. And then go back to that. And we, oh, there it is. Okay, we do have it in there. And save. Alright, now we will go up to the top, just spin it once, and it should spill right out. Home. Refresh. And then we go down and look for it, down at the bottom. Well, let's try it again. There it is right there. Okay, so there's BZF. You can see we've been in a daily sell for a couple days. It's the same as our same situation with the West Texas Intermediate. We're in a sell also. Oh, let's see. West Texas soybean pharmaceutical under my circle of interest. Okay, sure. So let's do West Texas after all that. That's no problem. At least I have it in there now when I need to go look at it. Where is West Texas? There it is right there. Here's West Texas. You can see the same situation. It's pressing down. Over here, let's see. Let's put it up on J4X2. Right there. You see it pressing down. And so now, let's see if we can get some options up on it. Now I know that they have this. Let's go to, where's it at? Right here. Here it comes. There's the option screen, and I believe we can use. Let's see. Oh, let's see. Let's try this. There is the ETF, and it's the 78 days out. It's a oil ETF. And it's trading, let's see, where is it at? It's trading at $28.42. Pure beta crude oil. Okay, and so I'm not sure why they said it that way, but they're not really showing much of a chart. But it's the oil contract. And let's see if we can find a little better example. Let's put it up on the new platform. See what it shows on the new platform. It won't be that hard to do because we already are at it. Let's see, add again. There. And OIL. Save. There we are. Now let's refresh it. And then we will find OIL. Now this is an oil ETF. Excuse me. There it is right there. Interesting. Now why is that not coming up? Let's try it over here. They're not bringing that up either. Let's try it right there. Okay, so when I punch oil in there, it's okay, here we go. We'll put that in there like that. can I get options on that? I know this is a oil ETF. I know it doesn't match up to the price of oil itself. I forget exactly what it's doing, but you can see here it's at 28.42. But we can show you, I want to be able to show you the options too. So let's see if we can put the options up there. How do we get that? Oil, pure crude. How about crude oil? Let's see if we can, maybe we can look for the symbol of it. Message, share, watch list, charts. No. There's not a symbol. Library. Maybe library. No thanks. Okay. Let's see. What's that? Chart parameter. That's oil. Okay, here we go. Industries, indexes, ETFs, symbols. Let's just go down to the oil and see if we can find options on the oil. There's a lot of A's there, that's for sure. I think these are all stocks. E, F, G, H, I, J, K, L, M, N, O. Should be coming up on the O's now. M, N, O. Whoop. Let's try that again. Where'd the symbol go? How to find, is that Chicago Quant Technologies? Yes. Here, let me show you. I thought you were talking to Robin already, but we'll just show it to you again. Let's go like this. That's the one we're offering for a beta test at the moment. Let's see, trade. Right there, there it is. And there it is, right there, Chicago Quant Technologies. Now I can put up the contract of oil, and I thought that the ETF would jump out with strike prices, and it does. All right, so in other words, the product is trading at 20. This is trading at 28.42, and so you can, let's see, where is that? There's a 33 strike. There's the 32, 31. It shows you where they close. They're 78 days out. You can see here the 27 is at 90. That's kind of odd because we know it's at 28.82. That's where it settled last night or on Friday. So we're a little surprised at 28.42. See, this is the oil. This must be some type of, I thought there was a paper practice. Let's see. I thought there was a ETF. There's a couple different oil ETFs. Let me just look at some other oil ETFs. Let's see if we can do this. Oil ETF. Let's see. Oil ETF. There is Horizon Crude Oil ETF. There's a Brent Oil ETF. There's a West Texas Intermediate ETF. Let's see if we can find one of these. Let's go to ETF Scanner. Crude. I remember trading the oil. I remember it was $9. You know, I mean, it's usually about a third. It's broken down in almost thirds of the West Texas because it's a little tough to deal with for them for delivery. So they made it into thirds. Let's see, my portfolio watch list, finance, home, videos, screeners, industries. Let's try industries. Oil, oil, oil. Nothing jumping out. You would think it would. I mean, I'm seeing Freeport, McNamara. I'm seeing all kinds of different energies. Okay, let's see what that does. What do we got here? There's ExxonMobil, CVX. Let's see if they have Valero. Okay, so these are different companies. but they're not showing us a ETF itself. Yep, and that's, again, there's, I think, let's see if we can find this too. We'll find it right here. I thought we had it right here. Chicago, let's try this. It'll come up. This is for USC. There it is, right there. There's our website too. Looks the same as the other. And there you can see right there is the email address I just highlighted. Let me just move this. There we are. Now let's see if we can find the options. That's what I want to do. Is I want to find the option, oil options. Oil options. Let's type that in and see if we can find that. I could have sworn that OIL was way more. Oil ETF options. Funds for category. That's interesting. It's not really spitting anything out. Future screener. Well, this OIL is a half decent example. Let's get rid of this stuff here. Where's it at? Let's just get rid of that. And then we'll go to the charting itself right there. And let's see where the oil is, all the way down at the bottom right there. And that's doing the same thing. It's not really giving us, I guess that's the, that's not right either, is it? It doesn't seem to be picking up the oil contract itself. I thought we could show you an ETF of oil and that would be good enough, but it's the options themselves are kind of a little odd. They're not really reflecting the value correctly. Let's go find it again here, right there. Yeah, see, if it's 28.42, then the 27 call, which is right there, is value. They say it closed at 90. That would make it 27.90, and we see here where it settled at 28.32. So it's 42 cents underneath value. Now the 26 call, there's no price added at all, and the 24 is at 26.85, which again is undervalued. So that doesn't make any sense. Let's see. Let's just see if we can go back. Find shorter time. See, it's in it. There's 109 days. There's 18 days. Even that doesn't make any sense, especially with the product at 28.42. Huh. That's very odd. All right. So what we have to do is I have to find another. This is good for equities. You know, we can do SPYs. You're interested in, let me go back to the chat line. I think you're interested in soybeans. Let's see. You're looking at soybeans, pharmaceutical. Yeah, well, we can follow them. We can find which pharmaceutical are you interested in. We can go look at one of those, because that's a stock, and that's what this option page is a stock one. So, let's take a look at which pharmaceutical are you interested in. I'll have a sip of my tea, and we'll go from there. And again, we're talking options here, and we will go, in the last 15 minutes, we will definitely turn to looking at the charts themselves, the algorithms. So in case you're following our algorithms, you'll be able to see where our algorithms are. No, the pharmaceuticals, I guess, like Eli Lilly and so forth, that's a stock, so we can get that on this system. And we can add it to our algorithm at the same time. I think Giannos every so often looks at Eli Lilly also. That's one of the ones. I think of Merck Sharp and Dome or something like that. That's another good large pharmaceutical to pay attention to. And then obviously you have the Moderna types, the ones that are in the vogue at the moment. SC is still there. Maybe there's that much of a delay too. All right, we're going to go after Eli Lilly since I already know that's something we can get. Matter of fact, it may be already on our platform too. All right, let's find Eli Lilly. Let's see, where's the symbol at? I think that's it right there. I think that's a bond. Let me find just the stock itself. Where is it at? Let's try Lilly. Maybe it's LIL. LLY. That's it, LLY. Lilly and Company. Okay. Didn't realize it's trading at $500 a share nowadays. Wow. Okay. I haven't followed Lilly in a long time. So let's put LLY in there. And we'll go with that to start off with. Let's see, right there, right there, right there, right there. And LLY. Save. Okay, so now we have that. Now let's put it up in here. LLY. There we go. So you can see here, there's Eli Lilly, $537 a share. We're looking at 18 days out. We can go further. Let's put you up on the chat line so I can see. Okay. Now, let's take a look at it over here. We'll take a look at the algorithm. And that's how we decide what we're going to do. Click there, recycle there. And let's find the stock now. There it is right there. As you can see there, we've been in let's say whatever. Looks like we've been mainly in a sell from the $600 area. We went into the sell right here, and it's been pressuring down. And then you can see we've been in a weekly sell back a couple of weeks ago, 2 weeks back. This is starting a third week. So we went into the sell up here in the 575 area. And we will see what this does, when it starts trading. Now, in that case there, when we were at 575, Joseph, good morning. Good morning, Mark. All right, I'm in the middle of the webinar, always 8:30 to 9:30, but I'll ring you back after I get done. Okay. All right, bye-bye. All right, so there is the Lily. So obviously, if we'd have bought a put spread, we can get a general idea of what the put spread would look like. We look at something $25 higher. Let's show you how we would do this. So in other words, at 575, with the stock now trading at 537, we would look at the 530. Let's try like the 550. Let's take a look at the 550 put. Since we went into a weekly sell, we would be looking at the puts. Or you could sell the call spreads. Either one, you could take your choice. But you want to play the bear side of it in the end. So in other words, with the stock basically trading at 537, we look at the 540 put, which is 1294. We're going to write these two numbers down. It's only going to be two numbers we're chasing after this morning here. Now I just need to find. There it is, like that. All right, so we go to we look at the 540 put, and that's at 1294. It's highlighted there. Can you see that there? I think you can. Yeah, right there. Highlighted, 1294. That's the 540 put. And then we go and look at, say, the 510 put. And right there. And this is 18 days out. There's the 10 put. It's at $5, say. Now we could, make it cheaper, and so you're investing only $694 in one put spread. Or you could even go to the 530, which is $930, and so you can make $10 and sell it at $930. So that means that you're investing $364 for the spread. So why don't we do that? Just a 540, 530, and that's $930. So that's $364 to buy that put spread. Now you can make, it's $10 wide, so we just subtract 10 from 3.64, which comes out to be $636. So you can double your money if it goes down. Now what we do is we go and look at something that is, in this case here, with it at 537. We went into the weekly. We know that here at the 575 area. Okay, there's the weekly right there at the 537 area. So what we do is we go and look at something right now. We look at, say, the let's add some strikes to this, and let's look at something that's $30 higher. Let's see, where's the strikes at? What looks like this. There we go. So in this case here, we go look at the let's add a few more. So we can see the 570. Let's say we look at the 570 put. And there should be spitting out. There's 570 put. It's at $32. And you can see that the 560 put is at $25, basically. So we write down those two numbers. So 25.48 minus 32.02. That comes out to be, see, what's that? That's 452. That's 754. Okay, and we paid $364, and so what it did is it doubled. And that's, if we see it go into a weekly sell, you can make a couple of different choices. You can sell the call spread, or you can buy the put spread. And obviously, if we went to do the call spread, let's take a look at where the call spread is now. Let's say the 540, 530 call spread. And we'll see what the difference is. Obviously, it doubled in price. Now let's see if by selling the call spread, how much that made. And we'll put that up there. Call only. So in this case here, we're looking at the 540, 530 call spread now, which is, there's the calls, and that's at 1387. Is that it right there? Yeah. At 1387, and the 540 is at 907, so that is 480. That sounds right. So that's 480. So you sold the call spread at 480, and let's see what it's trading for right now. And the most you can make is 480 when you sell a call spread for 480. Okay, and obviously the most you can lose is 520. $10 wide. And so now let's go and look at the 70-60 call spread. 70-60 call spread right there. That's not it. We want the 18. It was the 13. I'm sorry. 70-80. So 70 is 136. And the 60 is 310. So that's $1.64. That's $1.74. So it made $1.74. Is that right? No. It's $1.74 now. That made $2 and it made $3.06. The spread itself made 306. So, buying the put spread, you have the potential to make 636 out of. Was it the 636, and it's made that. And the most you can make on selling the call spread is $4.80. And so in this case here, it's made $3.06 out of it. So it's made most of that. And so that's what we do. We look at the algorithm, look which direction it's pointing in, and then we take it into that direction. All right, why don't we go finish up now? And we're always willing to have this option conversation every day now. And we will go and look at the rest of the products and go through them. So we just saw let's move the options off. And we will go over to here. And we'll take a look at, there's the euro. You can see the euro is still underneath. This is Monday, but it's playing with the daily buy. Let's take a look at cable. There's cable. It went into the daily buy on Friday, but it's in a weekly sell, so you don't take the trade, of course. And you can see here it's still in that sell with no problem, and now trying to go back into a sell. So it's starting to line up again to take a trade if it settles in this area today. Then we go over and we look at the Swiss. There's the Swiss. You see the Swiss is still climbing. It closed in a buy yesterday, but it's trying to get into a sell today. But we're a green and a red. We're having some problems. And at the same time, we are in that weekly buy still. So if it closes in the buy, we would try to play the long side. But in this case here, it's flirting. So it's a tomorrow's business in a sense. We don't do anything. And then we go over to here. There's the yen. The yen is almost threatening the 150 area now. Our high today is 149.82. And we're trading at almost 80, 79.9. So we've been in that weekly buy for a while, and we're still in the buy, and it's taken out the whole month. It's been in a daily buy the whole month. And it's been in a weekly buy since the beginning of August. Over here we go take a look at Turkish lira against the Euro-Turkish lira pairs trade. You see today this is telling us that they drove it as high as 29.60. It's down a little bit for the time being, and it's on a second day in a buy, and it's in a weekly buy now for the fourth week starting. We slide over to the South African rand. That you can see right there is the South African rand is trying to climb in the wrong direction for metals traders, and so that's probably indicating that the gold is down, which I know it was earlier today, and it's in a weekly buy for one full week going on a second. So unfortunately the South African rand keeps on telling us that gold wants to go down, and we go take a look at it over here, and you can see, we'll go through the metals real quick. There is gold down, unfortunately, for the longs, fortunately for the shorts. You can see here it's in the weekly sell for a second week now, and a daily sell for 6 days. Silver, same pressure is on that. You can see it when it closed in the weekly sell last week. It's been in a daily sell for 5 now days, and they're breaking the 22 area. How about that Eli Lilly thing? It's a good way of understanding the strategy. We're going to do this over and over every day. I like the idea that we're communicating this, and I think a lot of people want to understand how to use the algorithms with the options. You can see here there's copper. Copper was funny. It was strong this morning. It was up. Now it's down, and you can see it's breaking the zero line, and we're starting to see pressure in it there. Matter of fact, I think I'll put a little red line in there as we speak about it too, like that. And so there we are right there. There's copper. Copper, copper, copper. Where are we at? Right there. So that's the pressure we're seeing there in copper. And then we go over to platinum in January, and you see that same pressure there too. We're feeling that same pressure. So the metals are falling as the South African rand is rising. All right, and from there, we slide over to, where do we go to? From there, we take a look at the Canadian and look at the energies real quick, and then we'll be done for the day. It looks like we're at 22 after at this point. So there is the West Texas, which is unched. It's trying to lift. It's been in a sell for a couple of days, but not really going anywhere. You can see the weekly is threatening. We can say that. The weekly is threatening, but it's not in a sell yet. So we'll save that, and we'll put it up on there like so. Now what we do is we go and we look at the Canadian dollar over here. Usually the Canadian, it's a hit and miss anymore. The Canadian is so, the government up there is so off course. And they had those strange things where Parliament was celebrating some Nazi or something like that. Trudeau's government is definitely upside down. We can say that much. Let's see, where's it at? There's the CAD. You can see the CAD is lifting. And you would assume that means that oil is going down. But we're not really. And it is. You know, we can see this last couple of days there. And you can see the weekly now is starting to have an effect. I guess we could say like put that like right that, because and then we can go find one of the last weekly sells and we'll move it in there like that one. Move it over. So we've been in the weekly sell for, and usually when this is going down, oil is going up, but you can see how it turned back up again on a daily buy right there. Let's steal this daily buy. And went into a daily buy here, and it's found ways. It did break down a little bit and then found a way to climb back up. So it's been very odd, the Canadian. But then again, the government has, you know, been doing some really strange stuff to begin with. So that is the gist of it all. Huh. And so that's where we are at the moment. We're looking at the energy sector, and let's take a look at natural gas too. Where's the mousey at? There's natural gas, and we did see some strength in the natural gas going on. Let's see what we got going on here now. Right there, there's natural gas. No, let's cancel that and go like this. And there's natural gas. You can see it's pressuring down to the point where we're below the daily sell now. And you can see we're flirting with the weekly buy, just on the edge, just on that edge. But you can see the pressure is on this. It is kind of hard in the United States. We have so much natural gas that it is hard to get the natural gas going too high around here. Whereas in Europe, you know, without the natural gas, it is a squeeze going on with the winter months coming on. So that's the view of all the energies. West Texas right there. We can see the differential. There's trading at 90.93 on the front month, and the back month in January is trading at 87.32. So we're looking at a $3.60 premium. Just show that to you again. $3.60 premium on the front to back, which is enormously high, which tells us that there's a lot of pressure on the short term for, you know, for crude oil. All right, traders, we're done for the day. We will talk to you tomorrow. We'll talk about options. We'll look at the algorithms, and this way you can trade a little bit easier by having a good idea which direction the algorithm is headed, and then you can go and put a conservative position on and not have to sweat too much about being right or wrong. You won't get stopped out because you are automatically in a position that, you know, when you buy enough time in options, you don't get stopped out. You know, you just end up taking it off after a while, and you might lose some money or you might make some money, but you won't be crushed. You won't get stopped out to the point where you don't get a chance to, you won't have problems. Let's put it that way. Major problems. Let's put it that way better. All right, this is Doc from North America talking about options and algorithms. And we'll talk to him about these things again tomorrow. Remember, traders, if you have an interest in any particular product, we're always glad to take a look at it, regardless of option or no option. So this is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.